Hello traders, you are welcome to this video. All right, and I welcome you back to the Forex Geek channel. In this channel we break down the best tools and strategies for mastering the markets. However, in this particular video we are going to be talking about a powerful combination that can elevate your technical analysis game. Okay, so we are going to be looking at a strategy that combines the RSI and the Bollinger Bands. All right, so now these two indicators are incredible on their own, but when used together, they can help you identify market trends and potential reversal points like never before. So let us just add these two indicators to our chart. The relative strength index, first of all, and then the Bollinger Bands. Here we go. All right, now first up, let us quickly review what these indicators are. All right, it's important that you understand, just in case of if you don't really know exactly what these indicators are in detail. All right, let me just briefly talk about them. All right, the relative strength index is a momentum oscillator. Okay, this indicator measures the speed and change of price movements. All right, it is plotted on a scale of 0 to 100, as we can see, and the levels 30 and 70 indicate oversold and overbought conditions. Levels above 70 indicate overbought, levels below 30 indicate oversold. All right, briefly, that is it for the RSI. Then for the Bollinger Bands, the Bollinger Bands is a volatility indicator. Okay, take notes, it's a volatility indicator and it consists of 3 lines. Obviously, we can see that. Now, the middle line is a simple moving average. The middle line is a simple moving average, and then we have 2 bands, the upper band and the lower band. Okay, this upper band and lower band are usually 2 standard deviations away from the moving average in the middle. Okay, so these bands, they expand and contract based on market volatility, so it gives you a visual sense of price extremes. All right, so now why do we combine these 2 indicators, you might ask? Well, the RSI helps you to gauge momentum, while the Bollinger Bands show you the range of price volatility. So now together they provide a more comprehensive view of what is happening in the market. For example, if the price touches the upper Bollinger Band, all right, and you have the RSI above 70, for example, it could signal overbought conditions, potentially a reversal. On the other hand, if the price hits the lower Bollinger Band, all right, and you have the RSI value below 30, it might indicate oversold conditions and a possible buying opportunity. All right, now let us talk about how to use these indicators in practice. Now, one popular strategy is to look for confluence. Obviously, confluence is a situation whereby you have 2 indicators or more telling you the same signal. We have talked about confluence in a previous video. You might want to check that out. So when you have 2 indicators or more telling you to do one thing, either to buy or to sell, then you have a confluence. All right, so now, for example, let us look at brief examples. Okay, when you have the price of the asset hitting the lower Bollinger Bands and you have the RSI within the oversold territory, or at least at the edge of the oversold territory, pointing upwards, you have a confluence. All right, it indicates that both indicators are bullish on that asset. So in that case, you can enter a buy trade, set your stop loss below the swing low, and then you can target the upper Bollinger Band for your take profit. Okay, you can target the upper Bollinger Band for your take profit, or you can just make use of support and resistance zones. Okay, the Bollinger Band, can sometimes act as dynamic support and resistance zones in themselves. You can see that when price is getting to the upper Bollinger Band, it's being rejected because upper Bollinger Band is serving as a dynamic resistance. All right, so when you make use of your horizontal support and resistance zone, it can even give you exit points as well. Okay, and then when you are in a sell trade, for example, let us see, we have the RSI in the overbought territory, and then you have price hitting the upper Bollinger Bands. It can be a cue to enter a sell. Okay, when you enter a sell, you set your stop loss above the swing high, and then for your take profit, you can use the lower Bollinger Bands for your take profit. But it's similar to the case of a buy. When you are setting your stop loss and your take profit, please pay attention to whether the market is trending or ranging. All right, because in a trending market, there is no need to set your your take profit, sorry, for a buy at the upper band or for a sell at the lower band. The reason is that when the market is strongly trending, you will see price piercing through that band, so you will miss out on a lot of opportunity. For example, here now, if you had set your top profit here, you will miss out of this price move. So if it is a trending market, if it is a ranging market, all right, you can be using the upper band for your take profit in a buy, or the lower band is for your take profit in a sell. That is in a ranging market. But if it's a trending market, you should look for opportunities like, reversal patterns, like let's say in a sell move, look for bullish candlestick patterns or perhaps sharp patterns, or just look for support zones. All right, you can use support zones for your exits instead. That is for a sell. Then for a buy, you can use resistance zones for your exit instead. So if you had entered around here, for example, instead of exiting here, just look for, okay, this was another resistance zone. You had a resistance zone here, you can see. So you could have either exited here or the next resistance, depending on your risk to reward ratio. All right, your risk to reward ratio is also going to have a say. Yeah, because if you enter here and you are setting your stop loss here, that means you are risking, let's say, about 42 pips. Then this is okay. This is actually a good risk to reward ratio. If you had entered here and you set your stop loss here, that's you're risking, let's say, 50 pips. You're risking 50 pips to make about 140 pips. That's a good risk to reward. That's almost 1 to 3. Almost 1 to 3 risk to reward ratio. So that's actually a good catch. You can actually exit your buy around here if you had entered here and set stop loss here. Okay. So your risk to reward ratio is also going to have a say. Make sure you use good risk to reward ratios, and then make sure you always confirm from the RSI. Both the Bollinger Bands and the RSI should be telling you the same thing. The Bollinger Band should be bouncing off the middle band in a trend, in a bullish trend. It can be bouncing off the middle band, as you can see here, that is making higher highs and higher lows, or bouncing off the lower band. All right, and then the RSI should always be trending upward before you enter a buy. On the other hand, you should see the price bouncing off either the upper band or the middle band, trending downwards within the channel, the lower channel, that is for a sell. And then you should always see the RSI trending downwards before you enter a sell trade. Set your stop loss above the swing high and target a significant support zone for your take profit. All right. Now, here are a few tips to keep in mind when using the RSI and the Bollinger Bands together. Okay. It's important to avoid choppy markets. Both the RSI and Bollinger Bands can give false signals in a sideways market. So actually, I'm going to recommend using them in a trending market. Okay. When there is a significant sell move, when price is making lower lows and lower highs, or higher highs and higher lows. Okay. Now, it's important to also test your strategy before applying this combination to live trades. Test it on historical data or in a demo account. All right, it's very important. And there you have it. It's a complete guide to combining RSI and Bollinger Bands for mastering, or enhancing, rather, for enhancing your trading decisions. Okay, for making smarter trading decisions. Remember, practice makes perfect. So experiment with these indicators to see how they fit into your strategy. And if you found this video helpful, make sure to hit that like button. It really helps support the channel. And don't forget to subscribe for more tips, tools, and strategies to take your trading to the next level. See you in the next video.